What's going on, everyone? My name is Jeff. Do not turn trading into gambling, okay? There is a big difference there. Just because a very hot stock is expected to beat earnings and raise guidance does not mean the stock price is gonna go up. There is specific techniques that I administer around earnings time that have brought me a lot more success. And unfortunately, guys, I've had to make a lot of mistakes. I had to see other people make a lot of mistakes. You can buy a stock going into earnings thinking it's going to go up. You're going to get that quick 10% blast and sell off. Guys, unfortunately, that is just gambling, okay? Now, this is probably the most reliable stock in the tech sector that I can possibly think of, and it is also the biggest company in the world right now by market cap. That's Microsoft. So let's just talk about my first technique that I use, and I will tell you exactly how I played Microsoft today, okay? It's the easiest, it's the most clutter-free, and really, guys, it's also the most satisfying in a lot of ways. I simply just invest in Microsoft long term, okay? This is a company I decided many years ago that I was just gonna go long and stay long and dip by and not really have no reason or motivation to sell any of my shares. Like I said, the thing about Microsoft is its consistency. This is not the most explosive stock in the tech sector. And also, if you notice too, guys, it's up $3.63 after earnings. You know, it usually does not get a tremendous run after a good earnings report, okay? It's just not that kind of stock. There is not a lot of implied volatility. So Microsoft is the kind of company that I just relentlessly own. I have no plans of selling or trading out of it. This is the easiest way to play stocks on earnings. And really, every earnings report is always going to be good news, because if Microsoft had a bad quarter and they missed and the stock went down $5 or $6 or $7, I'm going to look at that as a great opportunity to buy more. So that is the first method, guys. Let's move on to two other methods I use. But first, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. Alright, now, the second technique I use, guys, is post-earnings recovery, okay? Now, as you can see, Micron is a chip maker. This stock has been struggling very much over the past couple of months. Micron pulled into its June 25th earnings report, expected to go much lower. And of course, I was not brave enough to make a move on Micron, so I waited for the earnings report to be released. I analyzed the earnings report, I analyzed the forward guidance, and I started conducting technical analysis on this stock, realized it had a lot of momentum, and also to the strength of the chip sector, okay? The semiconductors are making a furious comeback right now. And so this is what I did, guys. On July 11th, I noticed that Micron was getting a pretty good dip. I picked a price target. In this case, this is a $50 call that expires on August 16th. And so I bought two contracts for $29 a piece. As you can see right here, I spent a very small amount of money, only spent $58. Like I said, I like to have a lot of contracts on a lot of different companies. But I did this on an earnings recovery, okay? This is an overly beat down stock that is seeing a lot of strong movement on a strong earnings call and a guidance raise. So I bought two contracts, spent $58, and then I would say by the end of the trading day, just a couple hours later, I sold one of those contracts back for $58. So you see what I did there? I completely cost protected my trade. No matter what happens to this contract, I've already made my money back, okay? I was $58 in, I've taken $58 out, and the closer Micron gets to that $50 price tag, the more my one contract is going up. But even if Micron went completely bankrupt and got wiped off of the stock exchange, I've already protected my investment, okay? I've already protected my trade, and that's why I always do things in sets of 2 or sets of 4, is because when you get that first 100% gain, like I said, that contract is on the house. And I tell you, it is really nice when you get a 500 or 1,000% return on a contract that you spent nothing on. You know, you just have to kind of think about that. But this was a post-earnings recovery play. And now the next technique I use, guys, this is an earnings anticipation play, okay? Again, I'm in the chip sector, and one of my absolute favorite stocks, Nvidia. So not only do I trade this stock, but I also own it as well. And like I said, there is no friends in the game of making money. I will buy puts on this company when it's trading down. I will buy calls on this company when it's trading back up. So Nvidia is expected to report earnings very, very soon. I believe it is August 15th is when they're... So now I really want to zoom in on the past 1 month, okay? And the whole idea behind an earnings anticipation play, guys, pretty much this is how you're going to do it. The real strength, I guess, or the real bulk of this trade is going to be in the day or two before the earnings call is reported. Now, it is totally up to you. Like I said, if you used a technique like I did on the Micron contract where you're fully cost protected, I guess you can go ahead and gamble and sit these contracts through the earnings call if you decide to. But just keep in mind, if you have a nice gain on a stock the day or two before earnings, like the stock has run itself all the way up to the earnings report, and then just by chance they have a bad quarter and the stock drops, you know, that one contract is probably going to get sold for $1 or $2. Even if you can sell, it might just expire worthless. So the whole idea here is to try and capture that movement before earnings. So what I really dial into here, guys, is when Nvidia is experiencing some of these dips. Like I said, you can never really get the absolute bottom. But right back here in June 25th, when it was trading around the $150 range, I will pick up 2 contracts, okay? And then it runs up a little bit, and then it trades back down to 156, 157. You know, again, I've made 100% returns in just a couple of days, in just a couple of hours, using the kind of contracts that I do. But every time that Nvidia takes a pretty good dip for a couple of days, I'm going to swoop in and buy a couple more contracts, and then I'm going to get my 100% return and sell half. So you see what I'm doing here? You know, as we inch closer and closer and closer to that earnings report, I'm just trying to collect as many free contracts as I can. So I'm expecting Nvidia to be trading around 180 to 185 by the time they report earnings. Depending on how many contracts I have, I might leave 1 or 2 sitting there to ride through earnings, but the odds are I'm going to have everything sold off the day before earnings. You're just simply trying to capture all the movement running into the earnings call, okay? I hope that makes sense. You know, a lot of this, it comes with experience, and it's easier said than done. And that's not all of the techniques. There's other things you can do. You can play straddle options, which is basically like buying a call and a put, but that's not really a technique that I use, okay? I'm pretty confident in what I'm doing, and I'll gladly make a mistake as long as I'm learning from it, okay? So what I want you to do, guys, go down to the comment section, share with me some of the ways that you play earnings season. This is a really hot topic right now, and there's a lot of opportunities to make really good money when earnings are in full bloom. So thank you as always for watching the video, and have a great day.